Hello there. Welcome back to Financial Accounting Info. In this video, we want to look at the preparation of the departmental accounts, and we're going to look at question 5 on this question paper. And it requires you to spend on average 36 minutes on this question. So the question reads, use the information given below to prepare the departmental income statement of Ridgeway Traders for the year ended 20th February 2014. Then on the information part, we given Ridgeway CAFE consists of the following two departments. We've got Department of Takeaway and the Department of the Restaurant. Then next point, all goods are marked up at 25% on cost. And then the last point, this business operates by using the periodic inventory system. Remember, we have got two inventory systems that we have. We've got the periodic and we also have got the perpetual. So the main difference that is going to apply according to this video is that the periodic inventory system opens at the purchase account. So when the movement of inventory is going to be recorded in the purchase account, and we see that on the perpetual, it opens the trading stock account. So that is the main difference that we have that is going to be very valid according to this video. So we can as well try to go and see below that we are given that the following was extracted from the accounting records of 20 February 2014. So we're given a table whereby we are having a column for takeaway department, and then also we have got a restaurant department column, and we have got information that is also within the table that we are given there. So you can go through the information that is in the table of balance is given, and then beneath that now we've got the additional information. We've got allocation of workers as it's information one. Allocation of workers and floor space is as follows. We are given a table again that is summarizing the allocation that is there in the context of number of workers and floor space. So this is what we have that we need to go through, and we see that additional information is having a continuation that we're having there. So we have got additional information number 1 up to, and the last one that we're having here, which is 7. So this is what we have. So we can just try to go to the other section and try to see how did we present the departmental income statement. So we go there. So this is Ridgeway CAFE. This is the statement for Ridgeway CAFE, which is the departmental income statement, of course, at the year end 28th February 2017. Then we've got a column for takeaway and a column for restaurant. So we are just going to enter the figures in the respective columns that we are given there. Then I would see that we are going to start with this is the income statement, remember, so we are going to start with the figure for sales. So we are going to say sales. And of course, we have got some calculations that we're going to make that are going to relate to different columns that we have there. So we are just going to put them in brackets. So for sales, we go to our question and try to find out what figures do we have relating to the sales. So obviously, we come here, we have got our sales here. For takeaway department, we've got 525,000. For restaurant department, we've got 369,000. So these are the two figures that we are having. So remember, we need to put the net sales figure in the income statement. So we will look for data analysis or returns, sales returns. They reduce the amount of sales. So we go there. You are going to see that sales returns, we have it here. So we have got 1,000 for takeaway department, and then we've got 200 for restaurant department. So for takeaway department, we are going to say in brackets, our sales figure is 525,000. Then we subtract the sales returns 1,000. And then for restaurant department, we've got the sales figure is 369,000. We subtract 200 as the sales returns. So those calculations, obviously, we now summarize them in the brackets. So remember, these calculations are very important for the markup because it shows the marker where you are getting the figures. So you have to summarize the workings in brackets. So in this case, we've got two columns. So you can just put the formula for the first column first, and then we say and you put the other formula after that. Then we are saying now for sales for the takeaway department, we are saying 725,000. 525,000 subtract 1,000. And then you can just say and you are now referring to the restaurant department. You can say 369,000 subtract your 200. So we have summarized the workings that is relating to the calculation of sales within the two departments. So if you say 525,000 minus 1,000, you're going to get 524,000, which is going to come in the takeaway department. And then for restaurant, we are saying 369,000 minus 2,000, and then sorry, minus 200 here. And then the answer that you are going to get there is 368,800. So this is what we have. And then from there, remember our layout of our income statement, then we go to less cost of sales. So for cost of sales, we go there to check figures that we have for cost of sales in percent, so we can try to see. This is our question and cost of sales. We try to find out. We see we have no figure for cost of sales as pre-calculated in the question. So what does it mean? We have to employ that formula beneath that heading of cost of sales. So the formula that we are going to employ is to find our cost of sales. We say our opening stock. We add our purchases. We add our carriage on purchases. Our carriage on purchases. If you have got customs duties, you are supposed to add them again, and then you subtract your closing stock. Then you get your cost of sales. So exactly as what we are going to do here. So we go to our opening stock. Opening stock, we are given it as trade inventory at 1 July 2012, where the year is starting. We've got 116,500 for the takeaway, and then we have got 70,000 for the restaurant. So those are the figures that we have. We can go there. So we can see, so what it means is we are going to leave it blank in terms of cost of sales because we are calculating it beneath there. So we come here, we say opening. We can just say trading stock. You can either say it opening stock or just say trading stock and you put the date, the opening date that we have there. So that is the opening. So we are saying 0103, 0103, which is 1 March 2020, 2013. We have got 2013. And we have shown that this is the opening because that's where the year is ending. This is starting, sorry. Then for takeaway, we have got 116,500. So we're saying 116,500. Then for our restaurant, we are saying 70,000. 70,000. So these are the figures that we have. Then from opening stock, we add our purchases. So we go there. We try to find out again about figures for purchases. So additional information, you should go through it first so that when we are making the adjustments, you know where to adjust. Remember, if you look at our question here, purchases, it's got some adjustments that are in the additional information that you can only find out if you had gone through the additional information before you started answering. So very important for you to go through the additional information before you start to answer the question so that you capture each and every adjustment that is there. That can make it easier for you to recall whenever you arrive at the necessary item. So we are saying purchases, 190,000 is for the takeaway, 160,000 is for restaurant. And then we also have purchase returns that we have to subtract. 195, we subtract it from the figure for purchases, 190 for the takeaway. And then for a restaurant, we have 2,500, which is our purchase returns, which we are supposed to we have 2,500 for purchase returns for the restaurant, 2,500. We subtract it from the figure for purchases, which is 160,000. So this is the initial calculation that we have. But if you go to additional information, we have got something there which is stated on information 4. On 20th February 2014, bread 500 rands cost price was transferred to the takeaway department. So we have got stock of the bread which was transferred to the takeaway department from the restaurant department. So this is movement of stock, but remember, if you go to the beginning of the question, we can just refer back. It is stated that this business operates using the periodic inventory system. And we are saying that the movement of stock in a periodic inventory system is recorded in the purchase account, which is different from the perpetual system whereby they open the trading stock account. So very important for you to take note that. So in terms of this movement that has been indicated on this adjustment number 4, it means it's going to be indicated in the purchase account, of which we are dealing with the purchases at the moment. So we come here, we are saying it has been transferred to the takeaway department, which means it's a plus to the takeaway department, and it's coming from the restaurant department. So to the restaurant department is a minus. So when it's a plus to the takeaway, it's going to be debited in the purchase account. And when it's a minus in the restaurant, it's going to be credited. So it will be subtracted. So it means basically we are saying it's a plus to the takeaway and a minus to the restaurant. So this is an additional calculation that we are going to make as we calculate the figure for purchases. So as simple as that. So we go there in the additional, in the answer section, and we adjust it as such. So we come here. So again, in brackets, we are just going to indicate that same calculation, whereby we are saying purchases. We are saying for the takeaway, where the stock is going, we are saying 190,000 is the balance in the trial balance. Then we subtract the purchase returns, which is 195. Then we add the stock that is coming in, bread, which is 500. And now we make a calculation for the restaurant, whereby we are saying the figure that we are given in the list of balances, let's just try to see, it's 160,000. And then our purchase returns is 2,500. And then we have got stock that is coming from the restaurant, which is that bread is worth 500. So we subtract it. So we make the calculation as such. Then we now say, if you say 190,000 minus 195 plus 500 for the takeaway, the answer that you are supposed to get is 190, 305. 190,000, 305. And then for the restaurant, if you say 160,000 minus 2,500 minus 500. And then you get your 157,000. And then we are finished with our purchases. Then we go and check in terms of our carriages. We have got, remember, this is the trade, we are dealing with the trading account at the moment. So basically we are saying this formula that we are having here, this formula applies, it's shown in the trading account. So the section that we are adjusting at the moment is the trading account. So we are saying, let's check the figures that we have for carriages. And the carriage that we are looking for is the carriage of the purchases, is the one that falls under the trading account, which means the carriage of sales should go to the profit and loss account under less expenses. So carriage of the purchases, we've got 2,000 for takeaway, and we've got 6,000 for restaurant. So we can go and adjust for that one. So we are saying carriage on the purchases. And the figures that we have there, we've got 2,000 for takeaway, and then 6,000 for restaurant. Right. So if we adjust there, it means we are going to adjust there so that we can get our our net figure here, whereby we are saying 116,500 plus 190,305 plus 2,000, then we are going to get 308,805. So we do the same thing under restaurant 70,000 plus 157,000 plus 6,000, then you are going to get your 233,000. So we are not going to give any description in terms of these totals. So we can just go to the next step, whereby we are now subtracting closing stock. So here we are saying less trading stock. And remember the end date, which is 28 February 2014. So we are saying 28/02/2014. So this is what we have, and then we now want to check the figures for our closing inventory. But closing inventory, we know that these are the figures that we get if we are given a trial balance, it will be in the additional information. But here, so the trial balance we are given here, the trading inventory, that is a 30 June 2013. So we are having this is just a mistake. It's supposed to be 2014, and this is supposed to be 2013. Then we are saying the closing one is the one that we have here, which we are having 55,000 for the takeaway, and then we've got 32,500 for the restaurant. So we can just go there and put them as such. So we come here. We are saying this is first column is for the takeaway. That's where we're having 55,000. And on the other column, we have got 32,500. And we are saying less here. So we are subtracting, so we can put them in brackets. So we are generally in the takeaway, we are saying 308,805 minus 55,000. Then here, in the restaurant, 233,000 minus 32,500. Then at the net figures that you get there, you're supposed to put them there as a representation of your cost of sales. So cost of sales figures, we are saying under the takeaway, we are having 253,805. And we are going to put them in brackets because we are saying less here. And then we go to the next one, which is the restaurant. In the restaurant, we are going to get 200,500. And then we put them again in brackets. So this is what we have. So we can just say get our gross profit now. Remember the formula for gross profit. We say to get our gross profit, we say our gross profit is equals to our sales minus our cost of sales. As simple as that. So we just go and do a search. This is exactly the layout that is being presented here. So if you come here, we are saying the sales figure in the first column is 524,000. We subtract cost of sales 253,805. Then in the restaurant column, we've got 368,800. We subtract 200,500. So the answers are going to come beneath here to represent your gross profit. So in the first column of takeaway, you are supposed to get your 270,195. Second column, we are supposed to get 168,300. So this is what we have, and we are saying the description that we have obviously is the gross profit. And then I believe that now we go to less expenses. If we had other income in the question, we were supposed to go to the section of other income. But in this case, we do not have other incomes that are there in the question. So we are just going straight away to the less expenses. So what it means is for less expenses, we are going to bring our totals here for both columns, and then we list all the expenses beneath there. So we are saying we are going to the question and try to find out about these expenses. So we can just search for the expenses starting from where the table is starting, going down. So the first expense that is there is carriage on sales, which is 10,600 for the takeaway, and then we've got 4,000 for the restaurant. That is carriage on sales. But before you enter them, also you check if the additional information. Remember, you just gone through the additional information and to be able to see that you saw carriage on sales being stated in the additional information. So if you go to additional information number 5, carriage on sales still owing by takeaway department 800. We know that when it's owing, we add. Owing or accrual meaning the same thing, we add. So our 800 we're going to add to the carriage on sales of the takeaway department. So it means for the restaurant, there's no adjustment for that. We are just going to take the figure that we are given there. And we know that we have already identified these figures for carriage on sales. So we can just go through again and see them. We have got carriage on sales here, which is 10,600 takeaway. And then the restaurant is 4,000. So it means for the takeaway, we're going to say 10,600 plus the 800 that we're having in the additional information. So we come here. So we are saying carriage on sales, and we only have one calculation for the takeaway department whereby we are saying 10,600 and then you add your 800. So as you add there, you're going to get your 11,400. And then for the restaurant, we are taking the same figure that you are given in the list of balances, which is 4,000. And we're going to check in terms of other expenses that we have there. So after carriage on sales, sales returns, we did adjust for that. Then purchase returns again, we skip it. Then we go to standard expenses. We have got 23,000 for the takeaway. Remember, this is the takeaway and this is the restaurant. So for standard expenses, 20,000 and this one is 14,000. So we are saying standard expenses 23,000, 14,000. We're going to take them. There are no adjustments that are pertaining to standard expenses. So we can go there and enter the figures. So we are saying standard. For standard expenses, we are saying 23,000 for the first one, which is takeaway, and then we've got our 14,000 for the second one. And then we check on the next expense that we have in the question. Right, so we are saying from our standard expenses, we are now going to insurance 20,500, and we go to additional information to see if you've got anything that is affecting the insurance. But we'll see that there is nothing that we are seeing. So we check for the allocation. Remember, we are being given is one figure there, which means we have to allocate it between the takeaway and the restaurant. So if you come here on item 2 on extra information, they're saying overheads are allocated as follows. Then the one in question is insurance, which is saying 60% of the annual insurance premium must be apportioned to the restaurant. So what does it mean? It means we have got restaurant and takeaway. So restaurant is being saying 60%, which is 0.6 as a decimal. Then of course, For the takeaway, we are simply saying 100 minus 60%, which are going to get 40%. And we convert it to a decimal, it becomes 0.4. Basically, we are saying the figure that we are given there in the list of balances for takeaway multiplied by 0.4, then for restaurant multiplied by 0.6. So this is what we have for insurance. So you can just go there and try to find out the figure that you are given there. Is our insurance, we're given 28,500. So this one that we are going to calculate, 28,500. So for insurance, we are saying 0.4 for the first one, which is the takeaway, times 28,500. Then for the second one, we are saying end 0.6 times 28,500. So this is the calculation. So for the first one, we are going to get your 11,400. For the second one, we are going to get your 17,100. Then we go and check on the next one. So the next one is the rent expense. So on rent expense, we are going to check again. In terms of, first of all, you have to check if there's any adjustment that is affecting the rent. So we have to go through everything to check if we have got anything that is affecting our rent. But you'll see that we have nothing that is affecting our rent. So rent, but if you check on the allocation part, it's saying rent expense as a floor space. So we are going to use our floor space to calculate the proportions of rent expense. And floor space is given in additional information number 1, whereby we are saying floor space 80 square meters for takeaway and 120 square meters for restaurant. So this is exactly what we are going to apply here. So first of all, what is important is to find the denominator. And the denominator, you can only find it by adding the 2. So we are saying takeaway, restaurant, and we are having 80 for takeaway and then 120 for restaurant. So the simple part is find the total, whereby we are saying 80 plus 120, and obviously we are going to get your 200. So which means the proportions that we are going to use for takeaway, just say 80 over your 200, and then for restaurant, we are going to say 120 over 200. So this is basically what we are going to do. And then the rent expense amount is 228,000. So we are just going to multiply by 228,000 here. So let's just try to go and calculate it as such. So we go down. We are saying rent, whereby in brackets, we are saying the first one is 80 over 200. 80 over 200, and we are multiplying by between 228, we can just maybe try to recheck the amount. We are multiplying by 228,000, which is here. So we are here, we are saying 228,000. Obviously, it's going to be over 1. And then ends, we do the same thing, it's 120 over 200. Multiplied by 228,000 over 1. Second calculation. So on the first calculation, who's coming first column, you're going to get your answer is 91,200. 91,200. We can just try to bring it down so that it's coming here, comes here. So we are saying 91,200. And the second column, we are going to get it as 136,800. And we go to check on the next expense. So from rent, we have got salaries. And on salaries, we have got 240,000. 240,000. And I will go to check how are we going to apportion the salaries. Salaries is per number of workers. Number of workers were given it as 8 and 12. So we can just maybe try to present it like that. So we are saying 4 takeaway and 4 restaurants. And we have 8 and we have 12. We add there the total that you get 8 plus 12, you're going to get your 20. So it means on the first one, you can say 8 over 20. Second one is 12 over 20. So we go and multiply it like that. And then the total amount for salaries is 240,000. So we go there. Say salaries. And then we say the first one, 8 over 12 times 240,000 over 1. And you say, and the second one is going to be 12 over, sorry, here it's over 20. 12 over 20, and then you multiply by 240,000. And we calculate it as such. You'd see that in the first column, using this calculation of 8 over 20 times 240,000, you are going to get your amount is 96,000. In the second column, you get it as 144,000. So this is the attachment that we have. Then after salaries, we check again what do we have next. Right, after salaries, we are having advertising. So we can, as well, go to editor information and try to find out how do we allocate this advertising. So if you go there, advertising is the last one, which is saying must be shared equally. So basically we divide by 2. And the amount that you get, we put it in both columns. So advertising is 45,000, then we divide it by 2. And obviously we're going to get 22,500. So we go there. So here now we're saying advertising. We are saying 45,000 divided by 2. Do the same thing. In the second column, 45,000 divided by 2. And we get the amount. We are going to get the same amount there, which is 22,500. We're just going to apply to both columns. Then we go to the next one. After advertising, so the ones that we are now searching are not in the list of balances because we've exhausted everything that is in the list of balances. We check here, advertising is the last item. So you go to the additional information to check other expenses that are not stated in the list of balances. But if you come to additional information number, let's just try to see, is 6. An amount of 1,350 rands due by customers to the restaurant must be written off as irrecoverable. So these are bad debts. So whenever we see that there's an amount that is being written off as irrecoverable, it automatically means it's a bad debt, and it's relating to the restaurant only. So it means we only have a bad debt in the restaurant. In the takeaway, there's no bad debt, so we can just go and adjust in the restaurant. So we come here, we are saying bad debt. And we are saying it in the restaurant. The restaurant is second column is 1,350. And we are only left with the depreciation. So on depreciation, obviously, we listen to the instruction of the question in terms of calculation, method of calculation. The percentage is something that is given in the question. So if you come to information number 7, depreciation must be written off on equipment at 15% per annum on costs. So what does it mean? It means this one is a straight line method that we are using to calculate depreciation, and its formula is percentage times cost. So I will say 15% times the cost that we are given in the list of balances. So we go there. If you go there, you would see that the figure that we are given for the equipment figures, which are the cost figures, are there. We are having takeaway having a cost of equipment of 480,000, and then the restaurant of 190,000. So we are saying for the first one, we are saying 480,000. We multiply by the percentage given, and then for the restaurant, we are multiplying 190,000. And we do that, we check in terms of the percentage, we recheck, the percentage is 15% stated here. So we can go to the question and calculate it as such. And then we come here, we say depreciation, we say in brackets, we have got 15%, which is 0.15 as a decimal, 0.15 for the first column, which is for takeaway, and we multiply by the 480,000, which is the cost. And we calculate for the second column, whereby we are saying 0.15, which is 15%. We multiply by the cost that we are given is 190,000. So for takeaway, we are going to get 72,000. For restaurant, we are going to get 28,500. Then we have finished there. We can close it. Because what we need to do is to add the total of these expenses starting from the last row that we have here going up to the first row that we have under less expenses. So if you add the total of the expenses in the takeaway column, we are going to get the total of expenses being 335,360. 335,360, and we are saying less, we subtract. Second column of the restaurant, you add all the expenses, they go to 371,938. 371,938. We subtract again from the figure for gross profit. So by mere looking, you can see that the figures that we are having for expenses in both columns are greater than the figures that we have for gross profit. So basically, it means we are going to have a negative figure. If you calculate there, if you say gross profit minus expenses, we get a negative figure, which is going to be a gross loss, not a gross profit. Remember, it can only be a gross profit when our gross profit, it can only be your net profit, if our gross profit is bigger than our expenses. But in this case, our gross profit is less than our expenses, so it means we are going to have a net loss. So the departments, both of the departments are making losses. So let's see the magnitude of the losses. First column, we are saying 270,195 minus 335,360, then you get your net loss. Then in the second column, 168,300 minus 371,938. And then we get your magnitude of your net loss. So we do that correctly. The answer should come here. Down here is our gross loss. So here we are saying it's going to it's going to be your net loss, not gross loss. Net loss. So the first column, the figure that we are going to have is 65,165. 65,165. So we are saying 65,165. And then second column, we are going to have 203,638. So this marks the end of our departmental account. And these figures that we are having at last are net losses. So remember, when it's a negative figure, we are supposed to put it in brackets. So the brackets should be shown that indicate that this is actually a net loss. It's a negative figure. So this is what we have, guys, according to this video. Let's share the link to our colleagues who are doing financial accounting info. Let's meet again in the next video. Let's turn off the notification button so that we get notified as new videos are being uploaded, and get prepared as we are approaching the exam. I'm out to meet again in the next video.